Welcome to video 1B, What is a Tax? Defining a tax reminds me of when the Supreme Court was asked to define pornography. I believe what the justice said was, I don't exactly know how to define it, but I know it when I see it. But academically, there is technically a definition of a tax. It's a payment required by a government agency that is unrelated to any specific benefit or service received from the government agency. So it has three key elements: a payment that is required, that payment is imposed by a government agency, and that payment is not tied directly to any benefit received by the person paying it. So for example, income taxes are clearly a tax. It's a required payment, it's paid to a government agency, and there's no direct benefit we receive. For example, roads, libraries, we all do benefit from those, but it's not direct. Consider that different than the fee you pay to get the license plate on your car. So that you do receive a direct benefit. It's the authorization to drive that car legally on California roads, for example. So there is a nuanced difference between a tax and a fee or a license. So there are a number of different types of taxes. We're not going to spend too much time going through all of them in detail, but of course there's income taxes, and those are imposed at both the corporate and individual level. There are employment taxes, there are excise taxes, and there are transfer taxes. And transfer taxes we'll talk about a little bit, and you'll see that that is probably something you've heard of before. So employment taxes apply to both employees and self-employed individuals. And they come with a bunch of different names, right? So maybe you've heard them called FICA or Social Security or Medicare taxes or payroll taxes. And think of employment taxes as a tax that's there to provide a social safety net for individuals, either when they become too old to work or they become disabled. Excise taxes are a tax that is typically on a volume of a good as opposed to its sales price. So things like gasoline, alcohol, tobacco, air travel, these we typically think of as excise taxes. And tariffs, which are getting quite a bit of buzz here lately, are a subset of excise taxes that only apply to imports. So transfer taxes are a U.S. federal tax on the transfer of wealth. And that transfer of wealth happens at two different occasions. The first is at death, and then the other is as a gift. So there's a unified tax on both inter vivos, which just means during life, and testamentary, which means gifts at death. And interestingly enough, transfer taxes are paid by the giver, not by the recipient. So when you receive a gift, either as a gift or through death, that is actually tax-free to you. There are two big exceptions to the tax on gifts, either during life or at death. The first is there's an annual exclusion that is currently about $15,000 per person. So that means I could give $15,000 to each one of my children, for example. My wife could also give $15,000 to each one of my children. So you can see that there's a fairly healthy annual exclusion that cuts out most gifts. And then there's also something known as the unified credit. And the unified credit represents a credit that you can take against your gift and death taxes that amounts to about $10 million per person. And any more detail of transfer taxes, honestly, is beyond the scope of this course. So, of course, there are also taxes at the state and local level. States and some localities apply an income tax. We're all familiar with the sales tax, I assume. If you own property in most states, you pay a property tax. And there are also state and local excise taxes, again, gasoline being a prime example of those. So other state and local tax issues. For example, let's break down the income tax. Now, the income tax varies widely from state to state. And if you're lucky enough, you might be a resident of a state that has no state income tax. New Hampshire and Tennessee have a limited income tax, but Tennessee is actually repealing theirs. Both of those states only have an income tax on interest and dividends for the most part. There are other states that have no corporate income tax. So South Dakota has a corporate income tax on banks only. Wyoming has no income tax at all. And Nevada, Ohio, Texas, and Washington have a gross receipts tax. So it's not an income tax, but it is similar. So a number of states, of course, have sales and use tax, but again, you could be lucky and live in a no sales tax state like Alaska, Delaware, Montana, New Hampshire, or Oregon. And some states, for example, California, permit localities to charge a sales tax as well. And then other states only charge a sales tax at the state level. So sales tax has a best friend. It's known as the use tax. And that's the tax on the use, consumption, storage, or gift of taxable property or services in a state. And this typically applies when no sales tax is collected, which is often the case from out-of-state vendors. And if you haven't been watching, probably at some point during this course, the Supreme Court is going to issue a decision on an important case known as Wayfair versus the state of South Dakota that has a lot to do with whether or not a business has to charge sales tax to everyone that it sells a product to. So state and local has an excise tax. Again, the big one is gasoline. Some states have other unique taxes like a severance tax. A severance tax is a tax on the extraction of minerals or other natural resources out of the ground, typically within that state. So oil, timber, coal, natural gas, office on this PC, etc. So let's talk about where the federal government gets its revenues from. So you can see that the vast majority of tax revenue at the federal level comes from individual income taxes. The next biggest is payroll taxes, then corporate income taxes, excise taxes, and then everything else under the sun is smashed into the other. And the red figures represent the fiscal year end 2017 data. And you can see there hasn't been a lot of change between 2016 and 2017. So here's the sources of federal revenue over time. And you can see that individual income taxes, frankly, have been pretty steady through time, right? It was 40% back in 1950. It's a little bit north of 40% now, but not that much. Corporate income taxes have shrunk considerably. They used to be more than 20% of the federal revenue, and now they're much, much smaller, probably 10, 12%, something like that. You can see that employment taxes have boomed. And that is largely a function of the social safety nets that those pay for have become more expensive as our population has aged and we continue to grow older and live longer. And of course, the cost of healthcare is baked into that for retirees. Under the Medicare program, social insurance taxes have had to expand. Excise taxes are almost a blip on the screen. So even though we hear about tariffs, they don't really generate a lot of revenue. Those are mostly used as political tools, to be honest. Okay, so here is federal spending as a percent of gross domestic product. So the way you can think about this is if gross domestic product is the nation's income, then this is the amount we are spending of our nation's income. So what are the federal net outlays by the federal government for the nation's entire income? And you can see we're currently spending about 20%. That number's been creeping up since you can see the spike around World War II. It's been creeping up, and you can see that during recessions it tends to go up pretty dramatically. There's some pretty good economic reasons around that, but I'll let your macro and micro economists describe that for you in whatever courses you took. So here they are as a source, as a percent of national GDP. And you can see that the individual income tax, pretty volatile. It's bopped up and down, but it hovers around 8% for the most part. Social taxes, again, employment taxes, you see that those have climbed dramatically. Talked about that a couple slides ago. You can see the corporate income taxes have decreased, and you can also see other and excise, just not that meaningful anymore. So here's taxes as a share of gross domestic product. I know we just passed a tax reform with a corporate tax rate cut, but for what it's worth, you can see that in the U.S., we may have had high marginal tax rates, but the reality is, as a percent of the nation's income, we're really not collecting all that much. We're down there at the bottom, 26%. And you can see that the OECD average is 34%. So here's where we spend our money. And I think sometimes this is actually more important than where we collect our money. So that you can see in 2015, and this is largely still true today under whatever budget exists, which there hasn't been one for a while. Mandatory spending is 62%. So think of mandatory spending as spending that has been legislated. So for example, Social Security and Medicare are legislated programs. They're not subject to budgetary adjustment. Only discretionary items are subject to budgetary adjustment. So you can see we almost spend, including interest, we spend over 2/3 of all of our spending on things that Congress actually has no control over. Now they could re-legislate, but from a budgetary perspective, they have no ability to change these items because they're mandatory spend. Well, I guess we could default on our loans, but that would not be appreciated by our creditors. So the discretionary spend is only about 32%. So here it is over time. And again, you can see one of the issues is our discretionary spending has shrunk and shrunk and shrunk as Medicare and social programs become a larger part of the spend by the federal government. And you can see interest kind of comes and goes. We're in a really low interest rate environment right now. So we're benefiting from super low interest rates. If those ever go back up, you'll see a blip in that orange category up at the top. So here's total mandatory spending, right? So we said about 62% of that is mandatory. Here's where it's going. Social Security and Medicare represent, you can see large chunks, 22 and 37% of that amount. So when you think about it, what that means is we are spending substantial amounts of federal tax money on programs for basically the elderly. I mean, no doubt Social Security covers disabled, but the number of disabled in the country is quite small. Medicare, again, provides health care for retirees. And so you can see that's a big chunk. Income security is more of the disability type programs. Medicaid is medical health insurance for poor folks, and then veteran benefits and other. So here's how we break down discretionary spend. So about half of that 32% is spent on defense, and the rest of it goes towards domestic programs, and then just a smidge to international support. So if you think we're spending a lot of our money supporting other countries, the reality is we're really not spending very much, because remember, that's 4% of 32%. So here is spending over a period of time. I kind of captured more or less kind of every decade and then some estimates for 2020. And these used to be housed on the White House. The Obama administration and previous administrations used to keep this information. The current administration is not doing so, but it is available through the Office of Management and Budget. So you can see that Medicare is a big chunk and a growing chunk. We've figured that out. Social Security, same thing, right? Again, we've got an aging population. The baby boomers are no longer working, and so you and I are working to support them. Defense is a big chunk of how money has been spent for years. It has shrunk recently, but I would expect under the Trump administration that's going to expand somewhat. Before we move off this slide, I think one of the interesting things is when you look at things that are likely to increase our gross domestic product as a country. Now, again, I'm an educator, so I admit I'm a little bit biased. But you think about programs in education, training, employment, and social services, you can see that we spend 2% of the federal budget educating our population. So I don't know how we expect programs like Medicare, Social Security to increase GDP. They're not going to. All right, so growth in general fund revenues from the largest three sources for the state of California. And again, you can see personal income tax is the overwhelming biggest category. It's 65% of where the state gets its money. It gets a chunk from sales and use, and then just a little bit, again, from corporate taxes, 8%. So how does the state spend its money? Well, this is where the education spend really comes in. You can see that most of the state tax revenue does go, in fact, towards K through 12 education. There's a chunk that goes to higher education, 11%. Health and Human Services is similar to supporting the civilian population for the things it needs. So think of that as everything from welfare to libraries to medical clinics, this sort of thing. Corrections and rehab, you can see we spend quite a bit in this state on putting folks in prison.
As your body grows bigger,
your mind must flower.
It's great to learn,
'cause knowledge is power.
It's Schoolhouse Rocket, the chip off the block of your favorite Schoolhouse Rock. Now let's meet Taxman Max.
Welcome to the new variety, sit and relax. I'm that song and dance phenomenon, Max. Let me sing for you, do my thing for you till they give me the axe. Here's the song I'm doing, gonna fill you in on tax. Tax is that familiar melody, simple and true. Hum it if you've earned $1 or $2. Bucks are being spent by the government for whatever they do. Anyone who earns a living gives more than a few, so our schools can be their best, so our roads will have no cracks. Someone fix those train tracks. I hear you calling Uncle and I'm paying my tax. Oh, these are my girls. Hello, girls.
Oh, Max, nice outfit. There are many different ways that we pay what we owe.
Ladies, if you'll form a lovely tableau.
Income, property, sales, utility,
Candy bars at my show.
licenses for dogs and cats.
And that's not all you know. Out of almost every dollar a person can make, city, state, and federal governments take what they think is fair. You give in your share now, and then there's a break. Max is talking taxes. Hey, have I kept you awake?
For the things your town may need, for the things the country lacks. All good things take greenbacks. We hear you calling Uncle and we're paying our tax. People do complain, say their taxes are high. What am I to get in return?
Look around, your friend. Max is showing you why.
With your taxes you support how we live and how we learn.
Now, here's the good news. Many things are tax deductible, which means their cost can be subtracted from the amount of income you'll be taxed on. Things like medicine, doctor bills, and supplies for your work. So keep those receipts. Be kind to your parents at tax time. And remember, April 15th.
April 15th, what a showman you are, Max. Entertaining us with tax. In those snazzy plaid slacks.
These slacks are for my business. I tell you, I'll deduct them. I hear you calling Uncle and I'll pay you my tax.
Here's tax, our Max.
And I'm deducting my sacks.